Well, time to see what's on the radar for Jamie Murray, the president of the Murray Wealth Group. And this week is shaping up to be a busy week, Jamie, for earnings. And you've got two companies reporting this week, and we'll get your thoughts on them. And we'll start with Microsoft first.
Yeah, so Microsoft's going to report Wednesday after the close. This is a company we've held for a long time in our Global Equity Growth Fund. It's done quite well, obviously, over the years, but it's had a bit of a rough patch the last 6 to 9 months. Despite all the excitement around AI and Microsoft most likely generating tons of revenue in its AI Azure services division, we haven't really seen the stock move up. And I think there's a couple of reasons there. I mean, first off, we hear a lot about the LLM foundation models. These are the ChatGPT, OpenAI, Gemini, Google type models that we're all using more and more and are now breaking into the enterprise, which is Microsoft's bread and butter. And so a lack of that foundation model, I think, is holding Microsoft back as well. They've been looking to develop some custom AI chips similar to what Alphabet and Google have with their TPU series. And they haven't really found much success in that avenue. So I think there's a couple of long-term strategic issues that Microsoft is facing. Now, despite that, we still think that the company has a deep enough moat around its everyday business suite of products, so Office, then that translates into its Azure growth. So we still do think the company has a bright future, but I think these are a couple of headwinds that we're looking to get some more clarity on the conference call.
Okay, let's jump over. And UnitedHealth, the health industry has had a rough stretch. And what do you think of UnitedHealth?
Yeah, so United's another one of our holdings in the same fund. It had a very rough early 2025. The first 6 months of the year did not go very well. And there's a few issues. And again, a lot of it comes down to this persistent inflation we're seeing in certain sectors of the economy, and medical costs and health services is one of the main areas. And so that was one of the factors that drove the stock down. And now UnitedHealth operates on very, very thin margins. Even in the best of times, their net income margin is, call it 3-4%, maybe a little bit higher when things are going their way. And so it doesn't take much of an impact to see that margin go from 3% down to 1.5%, which is exactly what happened last year. Now that just provides the similar upside on a recovery, and that's where we think we're moving into, or out of that tough first phase and moving into a recovery. They switched out the CEO last year. They brought in the former CEO, actually, from back in the 2010s when UnitedHealth had a very strong run. They laid out a 3-year path to get their earnings back up, and we think that was UnitedHealth's way of cementing sort of a low level of expectations. And we think they're now back into a beat and raise cadence. So we're going to find out, I think, tomorrow morning how UnitedHealth is doing and how those medical costs are trending.
Okay, I want to jump back to Mag 7, and Meta is the other one you wanted to talk about. Your thoughts there?
Yeah, so Meta, like Microsoft, they're not really they're in the AI game. They're really benefiting from AI recommendations in their core Instagram and Facebook business. And so we're going to see strong revenue, we think, out of that. We're going to see very good performance on all their core businesses. But the problem with Meta, and again, this is a stock we own, but this is more what the market is saying, is that you're spending too much money on science experiments or investments that we don't really know what the return on investment, what the ROI is going to be. And so we saw that with the metaverse. We saw that with the big headsets. And now Meta is spending a ton of money building out AI products and services, not just for its core business, but for businesses. They're trying to build that foundation model that we're all going to use. Rather than going to ChatGPT or Gemini, we're going to use Meta's AI model. And it still really hasn't caught on. And so I think the market's looking for some answers on Meta's AI spend and where that's going to go and what it's going to lead to.
And I'm just we've heard talk of maybe social media being banned for kids in Canada, and I'm looking at a story out of the States. Meta, TikTok, YouTube going to court over allegations their platforms are fueling a youth mental health crisis. Are those factors, or are these things that they can weather?
So we think these are things they can weather. I think that there's I mean, certainly we saw that in Australia, and I wouldn't be surprised if we do see more, particularly Western countries, adopt similar policies. Now, obviously, Meta makes, the key and core customers in a lot of these age groups is that 18 to 35-year-old consumer that's very digitally savvy, will actually follow through on spending money from ads and where you see ad conversion trend higher. So we think it is something that they can weather. But definitely it is a headwind for these companies. And I think that is why we see Meta historically trade at a lower multiple than these other companies like Amazon and Microsoft and now Alphabet, is there always are these sort of persistent regulatory and political overhangs on the company.